What if I told you that your biggest business expenses could become your greatest asset? For too many business owners, that's exactly what's happening, but in reverse. Picture this. It's 20 years from now. You're ready to retire. But instead of selling a valuable property asset, you're writing a final rent check. This is the reality for countless business owners who didn't take action when they had a chance. Fair enough, they may get a few $100,000 or whatever it may be for the business. They walk away with it. A nice little check, but not asset, which keeps being an income over retirement the rest of the years. Yes, but you say, I can't really afford it. It's too expensive. And correctly so. When you first start a business, it is a very large expense. But you can also, if you can't do it at the start, maybe you can see how you go initially with your business, the first 2, 3, 4 years. As you get the cash flow, you build up your business, you make more money, you're building up a deposit, you're making a higher profit, hopefully. There are challenges there. So you've got to structure your lease to suit the situation, planning ahead. Work with someone who understands the property aspect as well as the business aspect. They can work out a situation with your rent, your current loan possibilities down the track, maybe negotiate a situation with the landlord where you may have option to buy down the track, even for a certain price in 2, 3, 4 years, what to aim for. They're all possibilities, which most business owners, in my experiences, don't know. It's also very hard to ensure you've got the right property. Have a situation where it may be the right size to cater for expansion down the track, or it may be. Develop a business plan and then work towards it as you go into your business. Also, there are advantages with owning a property. There's tax advantages, building equity, and also creating a little nest egg down the track when you eventually sell your business and can have an existing tenant paying rent, running your business for you. So you sell business for a certain amount of money, plus you've got the bonus of rental, or sell the property as well too. There are options there. On the other hand, there are drawbacks to owning your property. You've got the maintenance issues, you reduce flexibility where you're stuck there, you want to expand. Again, planning is essential. You may situation where you can open another business. So if you've got another similar sort of business somewhere else, another suburb, another town. But you're going to say, listen, I don't have the capital. I don't have enough money. I mentioned before, there are financing options available, possibly bring in some investors, talk to your bank, especially if you've got getting a good track record over the years. You may be able to work out some sort of plan with your vendor, the actual property owner. If you haven't discussed the situation when you negotiate your lease, so you can put it in concrete in your lease, where there's an option down the track to buy it for a certain amount of money at a certain period of time. If you didn't do that, you can always approach the owner. Are you looking to sell? They may be looking at doing something else, maybe opportune time. The thing is, owning your property safeguards you against economic uncertainties. Rents may go increase in value over time, so you may be priced out of the market. Property values, rental values turn out to be higher property values, so you're safeguarding against those increases. You see some amazing increase in property over the years in certain areas, especially as being rezoned. Another option for you is possibly redevelop it down the track as well too. Think about these things. Let me give you an example. I had a client who was running a franchise business and was paying something like $5,000 a week in rent in a shopping centre. And talking to him, I said, that sort of money you can probably, at the time, afford to buy something $4 or $5 million. I found something for him at half that amount. So his payments, assuming $5,000, a lot less. I'm not sure what deposit he had beforehand. So say, for example, he was paying $5,000. It was paying $2,500 a week, owning his own building. What happened? 3 or 4 years later, the franchisor ended up buying him out. He got a nice little cash return, which reduced cost of his building. He was renting out the top section for accommodation, and he had himself a nice little nest egg, earning approximately 12% return on initial investment. So the building doubled in value in that period of time. So instead of being a tenant, he was a landlord, and now he's got himself a nice little nest egg or a nice little windfall he decides to sell. It's a good situation to be in. So work with someone who understands the commercial property situation, negotiated plenty of leases, who also understands business operations and business leases and business sales to ensure that in 20 years' time, you won't be saying, I wish I purchased then. I would have owned it by now. So in 20 years' time, you won't be looking back and saying, I could have made that commitment 20 years' time. The amount of rent I paid over the last 20 years, I could have purchased it a long time ago. If you have any comments, put them underneath here. And if I can help you, feel free to contact me. My details are with this video.